Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Got a good show for you free folks today. Of course, we're going to discuss the Bill Ackman getting out of Valeant yesterday. We're going to also cover another low for GoPro, and we have two guests for you today. Our first will be at 8:15. That is Kevin Kleinman. He runs a site called WatchHimTrade.com where you can, guess what, watch him trade. And then at 8:35 we're going to have Nick Shaheen, as we do every Tuesday, our go-to options analyst. Joel, how are we doing in the markets this morning?
Not too good, Spencer. Traded down 5.5. Closed right near the high of the session, 71.75, 72 high. Now we're trading right near Monday's low. That's going to be the key level, 64.75. Two-day low down at 59 even. Crude sneaks into a $47 handle. Tell me about oil cuts from OPEC, and I can tell you something else here. Down 38 cents at 48.02. The low stands at 47.94. I don't know if we had some news that affect that. And gold just hanging out here above 1,200 psychological level, up $1.40. And you talk about psychological level, $17 in silver, trading that right on the nose. Dennis, how much Valeant Pharmaceuticals are you long?
Yeah, no Valeant for me. Obviously, we've got the big story of last night there, and Ackman officially out here. And this is kind of, surprising just because last week we, had word, there was rumors that Ackman was selling a stake, and he denied those rumors. And here we are a week later, and he sold it all. So obviously just want to make sure he got a better price, I guess, by denying the rumors last week. In any regard here, this was a disaster for Ackman. Obviously, this is a lot of egg on his face from this one. But he's out, it's it. He's calling it quits here on it. Stock is down over 10% on the official word that Ackman has sold his entire stake in VRX and threw in the towel.
What about risk reward, Dennis? Where he's buying a thing. I don't know what his average cost is. How do hedge fund, what's the risk reward?
A lot of hedge fund managers, I think the risk reward scenarios that they use are definitely not similar to traders. They're in them for a longer period of time. So, and they're so big, they can't just get in and out easily there. But, you look at this, and obviously risk management was maybe an issue here because, this is a stock that he started buying obviously a long time ago and probably lost 90% of his investment in this stock on this fall here. So now selling it down here at 1078. But, risk management's a lot more difficult for a hedge fund manager just because of the size of the positions. Even to get rid of this, you had to go to Jefferies. They got to do, a block. They got to go below where the current market price is to try to get the pricing for it. So it's difficult for hedge fund managers to get in and out. So they got to employ different risk management tactics. But, a lot of hedge fund managers, I don't know, like a Carl Icahn, like his risk management is double down and triple down and add to the losers there. And sometimes, it works and sometimes it doesn't. But, if you're big enough, I guess, you can employ those strategies there. I've always been a fan of, good risk management tactics, though. If you're a short-term trader, take advantage of being small and being able to get in and out easily. That's, how I trade. As you trade a little bit smaller, you can get in and out more easily.
And what about, you were talking to Guy Adami was talking on, was it Fast Money last night? That maybe Icahn
I think it was Guy, and, there was it was a good conversation here, and you guys were saying the same thing, They just mentioned that, obviously Icahn, doesn't like Ackman. They've had, some brutal fights there on CNBC publicly. And they were just saying, just to spite him, you'll wonder if Icahn doesn't come in and buy Valeant here now and try to make some money on it. If Icahn did come into the stock and then it got disclosed, it would pop big time on that news. It needs a catalyst, it needs something. But, then you got Andrew Left on Citron, from Citron last night. He was interviewed on CNBC. And, he was saying that he thinks this is a bankruptcy, that they're not going to get out from underneath their debt. it's something that we've talked about on the pre-market prep show too. I can remember saying back at 30, when the stock was trading 35 or $40, I remember saying I think this is 100 or a zero, but I don't think it's a $40 stock. And the reason was, if they can figure out the debt issues, there is some good drugs in the pipeline, but the debt is just too massive with this company. They had the whole philosophy of, borrow to invest, and they borrow and they bought more drugs and they bought up, growth. And they just got too big too quickly there, and now the debt is just hitting them. And obviously now they're selling off assets to raise money. They've got all kinds of issues at Valeant, and it's all related to too much debt.
And just moving on, you did mention that still all these years managing money, even with this loss, 20% average gain. So you know what? Everyone has their
On
bad.
Ackman, yeah,
That's incredible.
everybody is really hitting him hard here this morning. But the guy is still a pretty good money manager. He's obviously done well over the long term. It's a bad trade for him. He's had a couple of bad trades recently. You can think about the Herbalife as well. But overall, Ackman has actually done very well for his investors there. So everybody who's trashing him here today, here on pre-market prep, we'll give Ackman some props because he's still a pretty good money manager overall. He's had a rough go of it as of late, but everybody goes into their little slumps. Even me, as a trader, you have slumps. You get them here and there, and you just got to work through those. And obviously, Ackman hopefully
We're
is
going
going
to
to
get him
come
on
out.
the show. We're going to send him this clip today. Remind me to do that. We're going to get him on the show.
We're probably the only people that are actually giving him props here this morning
All
for his
right.
long-term performance.
The Ackman Valeant show is over. Now we're going to move on here. We have some movers this morning.
Yeah, we do. It's a lot of stocks, some interesting upgrades and downgrades, but VRX is the big mover here. So just before we move on, we usually like to give levels from you, Joel. And is this a new 52-week low? Yeah, obviously.
Yeah.
But is this a new? How far do you got to go back to find levels here? Like, can you find levels on this?
Yes, I can, and I'll just go to the 20-year month. Boy, I don't know. We hit 5. There's some different levels here. Let me look on my other platform with my data window here. We're not even back at the financial crisis lows yet. If you look at this, let's see. You had a low that won't work. 11.14. We took that out. 1059, we've taken that out too, haven't we? 1059 was your low in June of 2009. The previous month, 826. But I think with this, the numbers are not as relevant as half and whole numbers. I know some people in the chat were talking about $10. You got the 1030. On the upside here, what was the close will be huge if we can ever get back to the close in the issue. So that's what to keep an eye on. Nice round number, 1030 was a pre-market low, $10. Can't argue with.
Yeah, Ace is saying $10 too. I mean, the big whole numbers, psychological, do come into play there. So I do agree with Ace, and that's where I think the next bogey is $10. That's the big number there. See if it can hold there. See if it can bounce at the big whole number. Let's see what this thing does at 932. To see if people are going to come in. Obviously getting some Johnny come latelys there. Ackman's out. I'm out. But you never know. Ackman was even saying some decent things about it actually after he dumped his position. He's like, it's a smaller position for him now, and it was too much work for him basically because he's on the board, or he had 2 people on the board, having to manage this, having to figure it out, and he's just moving on and cutting his losses. But he said he still believes in the company. So, I'll be interested to see what this thing does at 930. I'm not in this though, and I'm not planning on buying this just for the simple reason. As a trade for anything, but as an investment, I just don't like buying something with this much debt. And I'm glad I didn't because, when this was back at 50, at 40, at 30, some people were saying it's really cheap. But when you look at that debt, it is still scary.
What's going on in the S&Ps, Dennis? We are really...
Well, it's Brexit. So you had the official announcement, Spencer, yesterday. Official announcement. Do you have the
right
headline?
now. Look at the last 4 minutes. We've lost. We're just falling out of bed here. We've lost 4 handles here since we started the show, and that's more than we move in like 3 or 4 hours during the day. Has there been anything breaking here at 806, 807, 808, or is it just a good old route?
I think it's just a little bit of follow through, but it's funny what we call a route nowadays. A 2 or 3 point fall seems like the end of the world here because we don't get massive down days anymore. 2 or 3 point falls, I never even used to worry about, trying to capitalize on because those happened all the time. But now with this low volatility, never go down market, we see a 2 or 3 point fall and we think, oh wow, got to jump in here and start shorting something. But We did have overnight. Brexit, it looks like they're going to start the process here, get it going. And if you're looking, at the European banks, they are getting hit. Barclays is down 2% here. Deutsche Bank is down 2%. Royal Bank of Scotland's trading down almost 5% here. So you're getting, I think that's the start of the catalyst there. Overseas, oil is trading down here as well. Again, we're down over 1% on the USO here this morning. So, that's another catalyst for the weak market here as well. And then, obviously spills over to our banks too. And if you look at our banks, they're all trading on the weaker side as the European banks are weak here this morning. So I think that's your catalyst. But, we know how this buy the dip market works. It never seems to get started. Give us some technical levels of S&P. Are you seeing any potential for more than a 1 or 2% sell-off?
Yes, I am, because U.S., South Korea, and Japan start drills off of North Korea.
That's scary, too. There you go.
Yeah, so, a little bit of war, which Trump is gearing up for. So I'll just give you 59 even. That's Friday's low. We'll take that out. Below that, your 3-leg low is not the 51 even, but a little war. A little war.
Well, they announced they were going to do that like 3
I know, they
3 days
did
ago.
last night. I know it. But they're.
No,
I
like 2
thought
days,
this was
like
announced
2
a while
days
ago.
ago.
Like,
Yeah.
This has been on the radar.
Like several days ago they announced
This isn't out of the blue.
All right.
But maybe, obviously this is, getting a little more serious, it sounds like here too. So we got lots of things to worry about here this morning. We got Brexit, we got a potential war, we got oil getting in here as well. So lots of things to worry about. But we know this market is the don't worry market, and probably when the dust settles and buy the dippers come
You
back.
want to do a little lunch bet? To buy the dipper?
Not today. No.
Unchanged?
I don't know if I'm coming in here buying this dip, like I just said, but that seems to be the trade, though. I mean, even though what you think, it always seems to work. So, whether it's today or whether it's, going to be in 5 hours or whether it's going to be tomorrow morning, I just don't know how you shake it. The buy the dip thing has worked for 2 years. It's really worked for 7 years. I mean, there's specific sectors that have been hit. There's specific stocks like Valeant that have been hit. But the overall S&Ps, every time they pull back 1, 2, 3%, money managers lick their chops and they buy the things right back up. It's sickening to me. I would like to see a little bit of more of a down market. I'd like to see some of these buy the dippers get punished because, like I've said before, it's learned behavior. Everybody keeps coming in. They keep getting rewarded. And it's not good, just to randomly just buy every dip. It's not a strategy. It's not, any efficiency, but, it's a trend. And I guess, the trend is your friend, and that is what has worked. So if you're playing that, I guess you continue to play it there. But, there is such thing as a bear market, folks. I know people, just started the market in the last 7 years, haven't seen them. They don't maybe even believe the fairy tales from the financial crisis and the fairy tales from the tech bubble. But these things do happen. And sometimes buy the dip doesn't work. And one day it will not work again. And I actually enjoy those days better as a trader because more volatility, stocks fall faster than they rise. And, I always am more of an inefficiency order flow trader, and there's more inefficiencies in a bear market.
And crude taking it on the chin here, 47.66. We know what brought the markets down in January and February of last year. So crude getting hit down to 47.66, almost taking out all of those gains from the OPEC cut, which seems like such a distant memory now. I guess actually basis the April contract, you need to get all the way down to the lower 45 handle, but the way crude moves, that could happen pretty quickly. All right, let's try and cover another stock here before we bring on our first guest.
Okay, jumping over here, just the one earning stock that's on my radar is DSW this morning. Here's an example of a stock that has just been hit hard into the earnings report. We knew if they said anything okay, that the stock might potentially rally here, and we are seeing that this morning here. So did they say something okay, Spencer? DSW. I'm assuming they did.
Yeah. I mean, it was okay. It was Q4 EPS 20 cents versus 16 cents. Sales of 674.6 million versus 691.5. So they missed the sales number by a little bit. As far as guidance goes, fiscal year EPS of $1.45 to $1.55. That's in line with the $1.54 estimate.
I don't know what to say.
So it's okay.
This is an example, 3.93% dividend, but it's a retailer, shoe store. Can we get a little short squeeze? Can we get a little pop? It's a big level. It's at psychological 20, yes, but am I coming in here buying this report? It wasn't a very good report. I mean, they're even hitting on it a little bit here again. Now it's back under 20 and missing on revenue. I mean, the retailers are just a mess. I don't want any part of them.
And it's hard to go on there because you can never find matching shoes because everyone, goes and looks at stuff themselves. So
is that DSW? Payless Shoe Source is the worst for that. If you go into a Payless shoe source, I don't know if you've ever been in one of those stores, but you can't find any shoes at all. They got them by section, but you're right, the shoes are in the wrong boxes. I'm not sure DSW if they're like that or not, but
All right, you just got to pop the 2053. We're back down under $20. Low of the move here from yesterday. Week close, 1980, 1983 close. That's where we're trading now. So keep an eye on that close if you're looking for any kind of rally here in DSW. 8:15, time to take our first break of the day and bring on Kevin Kleinman of Watch Him Trade. We'll be right back with Kevin. Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Elkana, along with Dennis Dick and Spencer Israel, and we have Kevin Kleinman on the line of Watch Him Trade. Kevin, how you doing on this snowy Tuesday morning in New York? That is.
Good, guys. Well, it's snowy here in Chicago, too, that's for sure. So we didn't get anything in February, but guess now that March has started, winter has started, right?
All right, so you gained an interest at the stock market at a young age, listening to John Najarian segments on Fox News. But what I want to get to is your grandpa stories of long-time investing beginning in the 1960s, all right? So what I learned from my dad a long time ago was that, interest rates going up aren't that great for the market. And here we are on the precipice of an interest rate hike, 100% factor. How do you look? Have things really changed that much where, the rising interest rates really don't matter to this market?
Well, I think, one of the perspectives I got from my grandpa is rising interest rates of today are nothing like rising interest rates of the
Sure.
80s, for instance, So we might raise 25 basis points tomorrow, but where are we coming from? We're still coming from rock bottom levels. So, and it's going to be gradual, right? They've told us that. And, so I think that aspect of things, interest rates are rising, but they're still going to be well below levels and at suppressed levels for a very long time by all accounts. So I think it'll be a factor. Just one of the reasons you're not seeing the market come down like you normally do after periods of interest rates rise is because it's not exactly apples to apples.
All right, so you attended DePaul, started trading in 2008. You left DePaul in 2011 to pursue trading as a full-time and start your business. What attracted you there? Did you learn things about the market, make some money from long-term investing, and want to try the short-term, or what was the driver for that?
Yeah,
for that move?
well, the attraction, I was interested in the market. So as soon as I turned 18, opened an account with just some money I had saved up from working in high school and whatnot. And the main attraction is when I initially got into kind of long-term investing. That's how my grandpa had spoken to me and whatnot. And so I started buying stocks in August 2008, September 2008. Woo! And as everybody knows, that wasn't fun. So I remember being on my phone, logging into my little E-Trade account, sitting in class, and just being like, what the heck? Like, my account's cut in half. Like, I had bought Morgan Stanley, I think, at like 36. It was down to 18 or something. JP Morgan at 40. It was down to 22. Apple at like 120. It was down to 80. I was just like, okay, something's going on here. So losing quickly and at that time, I think just piqued my interest to really learn more about what was going on in the current market because I really didn't know. I was just buying my stocks. I was attending school. I was working on the side. I wasn't paying attention to the news cycle necessarily. 18 years old, just kind of consumed with girls and trying to pass a test, So that really just kind of piqued my interest to start paying a lot more attention. And once I started paying a lot more attention and noticing in 2008, September, whoa, the Dow's down 1,000 points on September 19th. That hasn't happened, every day. And bank stocks are going up 10%, down 10% the next day. Like these are clearly, once they started rooting up, these are clearly abnormal times. And it seemed pretty entertaining more than anything else, certainly a lot more entertaining than whatever my professor was talking about. So that kind of motivated me to really get into it more and pursue it with more seriousness and more passion.
Kevin, the nice thing is, you obviously had, you started trading and you started, watching the markets here through the financial crisis there. There's a lot of traders that have started in the last 5 or 6 years here that haven't experienced that type of market. They haven't experienced a bear market. And we were just talking about this. Like, what advice do you have to those traders who, haven't experienced a bear market? And all they know is, if you buy the dip, you're rewarded here.
Right.
Obviously, you've seen, different types of markets here. So, what advice do you have, just even and pertaining to risk management?
Yeah. My one piece of advice I've really learned for myself is you can never believe a stock has to go a certain direction. Even during the bull market, we still had that great Apple drop in 2011, 2012 or so when she dropped 40%. And if you're buying Apple on that dip, you're getting killed. And if you're selling the market because the number one stock is dipping 40%, you were getting killed. So I just think everything's individualized. You got to do your research. You got to have your biases, but you have to have, your change points where, hey, if this happens, if this level gets breached, or if these earnings don't get met, then I got to change myself up. You can never assume that a stock has to go higher because it's always gone higher, or a stock or market has to go lower because Trump won the presidency and the market's going to go lower because that's what has to happen, because that's what I've convinced myself for the last 6 months that is what's going to happen. And I think that's a big mistake that new traders make. And, even veteran traders like myself, from time to time, you get caught in that mentality of, hey, this has worked before, so it's going to work again. It has to work again. No, it doesn't always work like that.
We're on the line with Kevin Kleinman of Watch Him Trade. Kevin, tell us a little about your trading style, how it's evolved over the years, and some of your favorite technical analysis techniques.
Sure. Well, I believe in simplicity more than anything. The main thing I look for in my strategy on a day trading basis is open and prior day's range. So if we open, do we stay above that opening price, and are we able to get up outside of yesterday's high? For example, Netflix yesterday made a nice move and it opened around 141, was able to hold 141, and then was able to get above Friday's high early in the day, which was 141.80. We got some good extension towards 143s. And now, from more of a swing trading perspective, Netflix is above last week's high of 142.80. So now I'm watching, hey, can Netflix stay above last week's high? I'm really looking at stuff like that to kind of determine the psychological impact of, hey, if we're staying above last week's high on Netflix, now anybody who sold Netflix last week sees a price that is higher than where they sold it at, and anybody who didn't buy Netflix last week sees a price that is higher than where they didn't buy it at. That represents potential buying power of people who can kind of second guess themselves a little bit, come back into the market, force this thing higher. So my technical analysis, put simply, is just really based on the most recent range relative to your time frame, whether you're doing day trades or swing trades or whatever, and applying that to what the stock is doing right now. Is it able to hold those prices?
All right, kind of a broad question here coming out of the chat from RD, but how do you handle losing positions? Are you going in with a predetermined risk-reward ratio? How do you work those losers?
If it's day trading, I generally try to get in at my loss point. I know it's not possible every single time, but I find that the better entry I get, obviously the smaller the loss is. So if I see a stock, like Netflix, for instance, if Netflix comes down today and she's down just kind of underneath last week's high, one of the things I want to see is Netflix be able to hold last week's high. Well, last week's high is 142.80. So if I see Netflix at 142.50 today, I can get in at 42.50 and basically say to myself, hey, if it's not coming back above 42.80, I'm getting out. So I like to get in just a little bit below that actual bias level, if you will. So it makes taking the loss much easier if I'm wrong, because I can just kind of snap my fingers, get out right away. Now, if I ever get caught, I don't like using physical stops personally when I'm day trading. I don't generally go in with physical stops. And sometimes, that burns me. You get an algo spike down or an algo spike up if you're short because of a newsprint or something. I've decided that, hey, I'd rather deal with that one every 5 times than deal with a stop run when then it just comes right back to me. So I think dealing with losers, number one, you have to decide, are you going to use physical stops? If you are going to use physical stops, better not complain about getting stopped out and then seeing the stock bounce. And if you're not going to use physical stops, you better not complain about not being able to get out quick enough.
One quick question before we let you go.
That
You mentioned the open, and that's something that Dennis and I have been keying on for a long time, the techniques. How did you come about focusing on that opening print?
The opening print, to me, you get your highest volume of the day within that first 30 to 60 seconds. So to me, that represents the most amount of money that's coming in. And again, it's just psychologically, okay, all that money that just came in, are they seeing gains or are they seeing losses right away? For those people that are day trading in it.
And before we let you go ahead.
Can he just expand on that, actually? Because he's getting into something. Just expand on that a little bit further, Kevin.
So, if I buy a stock right away at the open, the first 30 seconds of the day myself, and I get gains right away, I'm feeling good about that position. I'm more likely psychologically to let greed play a factor and hold on to that position for more. I'm less likely to be scared of losing money because I'm not losing money at that time. I'm seeing gains in my account right away. So that can add buying pressure. Anybody who sold on the open is seeing losses right away. They're more likely to be scared of missing out, or if they're short, of losing money. So that can add buying pressure as well and kind of keep the momentum going to the upside. Anybody who bought some, like a big fund who's trying to take a position right off the open and the stock's going up right away, they're not getting in at their price anymore. They got their best fill at the open. How long are they willing to wait to try and get their price on that given day? Maybe they can chase. That adds buying pressure also. Just trying to really get psychological reads on how the open impacts different people's decisions.
Hey, Kevin, one more before we let you go. Tell us a little bit about your service and why Watch Him Trade and what exactly it entails.
Sure. So I share my trading screen and audio feed live every single day from 9 a.m. to 11:30. I generally focus on large cap momentum stocks, Tesla, Amazon, Facebook, Netflix, Google. And you just see and hear everything I'm doing for those 2.5 hours. If I make a trade, you see it on my screen. You hear me mention my reasoning for making the trade, kind of my target, what I'm looking for out of it, my bias. And I just try to be as transparent as possible. I don't think there's enough transparency in this kind of alert business. I didn't want to start an alert site. I wanted to start a site that helps me get better, number one. So everything's filmed and recorded. I get to watch my trades from that day. I encourage members to kind of watch the trades from the day, see what I did well, see what I did wrong, and just kind of learn from it. But obviously, try and help some people make some money, try and make some money for myself.
All right, we've been on the line with Kevin Kleinman. You can check out his site, watchhimtrade.com, or on Twitter you can catch him at watchhimtrade. Kevin, thanks a lot for joining us today. We will talk to you again soon.
Thank you, guys.
Is Joel there or he's on mute?
I'm on mute twice. I told you.
Ah, Joel, you said you wouldn't do it today.
That's it. That's it.
That's
I'll
just the
go. I'm
pre-market
not doing it
show
again. I'm
that he
not doing
would
it again.
not make that mistake and have himself on mute, and he's already done it.
Twice. S&P's down 8.25 here, 8.5 at 63.25. Pre-market low 62 even, trying to get a bounce. Dennis, you want to address that question from the chat?
I want to get on just 1 second. I just want to reiterate something that Kevin was saying. He made a good point here, and this is something that I employ in my opening strategies here as well, is you've got to look at the psychological factors with that opening print. That's why the opening print is so big, and I know you look at it, Joel, too. You've looked at it for your entire trading career, because there is a lot. It's a big print. When you see where the actual price opens, especially, you're looking at those NYSE stocks. Sometimes, you'll get a print where 90,000 or 100,000 shares are traded on a stock like Walmart. There's a lot of day traders and short-term high-frequency traders that are either in at that point, they're long, or they're short. So that's all of a sudden a marker. And if you're a low-risk trader and you're trying to risk manage like a short-term trader or a high-frequency trader would, if that starts moving against you, those traders are apt to possibly sell. This is why sometimes what you'll see is a stock, we get to the fair value talk, you'll see a stock open where it's probably lower than fair value, but you get a few too many traders that are playing that type of strategy and they're buying it because it's opening too low, and you actually get an initial shakeout of those traders where you'll see a stock, let's say for example, fair value is like 25.20, stock opens at 25, it shakes out to 24.80 to get those weak hands out, and then eventually starts to climb back. And then, throughout the day, it ends up usually, and sometimes comes all the way back to where the fair value actually was. But you get those initial shakeouts because short-term traders, don't like the pain. They want to get out of the positions. And you get too many short-term traders on one side, the trade gets crowded. And then that can actually equal, a shakeout, the direction of, so actually the low open can actually get, lower just because of those initial short-term traders taking a position on the same side of the trade.
All right, great example. That was in BMY yesterday. We talked about it on the show. 140,000 to sell. I'm like, Dennis, are you out there hitting it? And you're like, I don't want to sell it in the hole. Looks like they had more than 140,000 to sell as the stock ended opening at its almost high print for the day. Now here's an occasion where people bought the open thinking, okay, big imbalance, I'm going to get out. Then they get caught. So the thing is maybe that person had 280 or 420 or 560 to sell, and they just started pounding it on the open, and those traders that bought the open never saw the day of light. All right, Dennis, let's get to Tracy's question right now on AUPH.
Okay, so read the question to me again.
There's an offering here in AUPH. I think it went off the board at $8 and change, and they're doing an offering of.
Actually, went off at the board at 1054. AUPH did.
Whoa. Okay, so why are they doing an offering at 675?
Okay, two things here, and I know in the chat they're talking about this. I often say it on the show that the offering price can often act like a magnet, which it is. It's pulling the stock price down. One thing I will say is drug stocks, smaller drug stocks, typically need to raise money at periods of time to fund their trials. So when you see a stock like AUPH rally from $3 to $10.54 in 10 sessions, is that not a fantastic time as the company to actually do a fundraise and raise money? I mean, here, you've been looking at stocks trading $3. Oh, they're going to get $6.75 on a big raise. So, that's, why, you see this with drug stocks. Obviously they get the big pops. A lot of times you'll see a raise afterwards. And it's just a great, opportunity to take advantage of their really cheap or their really, expensive price, because the stock prices run up so much. So why not get a little bit more money for your raise? So that's why I don't mind sometimes, stocks coming out and raising. It's another thing when you have like a secondary offering. So you always got to look at the reasons. Why are they, doing, raise? Why are they doing a secondary offering? If they're just doing it for insiders to sell, that's a completely different reason. We looked at that with GoPro back in the day when it was a 90, and it's telling you, hey, they think the prices of the stock is overvalued. This is the reason for this is more that we need money to fund trials. So that being said, stock usually always pulls down. Now, on the pharmaceuticals, it doesn't always go all the way to test that level because people realize the reason for this raise was simply, that they need to fund their trials. So there's a better reason than just, for insiders selling. So a lot of times you do see the drug stocks that do the fundraises bounce back. Now, that also being said, this stock was $3.50 here 2 weeks ago. got to 1054, it got overheated. Now it's coming back down to earth. The raise was a lot lower at 675, so that's putting downward pressure on it. Already 2.4 million shares are traded, but at 675, price is probably a really nice bounce here. I don't know if it's going to get all the way down there and test that though, just because of the reason behind it. It's good reasons for them to be doing it at this. I think it's smart management to do the raise on the day that the stock it just went up 20%.
Yeah, great timing on that. All right, 8:35 is time to bring in our usual Tuesday guest. That's Nick Shaheen. He's the creator of Create Income with Option Spreads. We're going to take a break. You want to bring Nick in on the
Let's
fly?
bring Nick on the hop.
Okay. All right.
Good morning.
Good morning, Nick. You sound so calm, cool, collected here. I guess you're not worried about a war with North Korea.
No. That is not on my checklist this morning. Other things were, but not that.
What's on your checklist?
Just the Fed, the bond market, all the other stuff, Brexit. I guess there's a Dutch election going on. There's a whole slew of stuff, yet the markets are completely ignoring everything so far.
So how are you going to take that going into a Fed meeting? I mean, we talked about it at the top of the show. We talked with it our first guest. I mean, conventional wisdom, interest rates going up are bad for the market, but coming from historically low levels, does it really not make a difference?
Well, it does make a difference. I think it's the what they say, how they say it, the tone is. I think the Fed. I've said it. I think before on your show is that they stopped being friendly. They don't kind of almost don't care to be friendly. Yet the stock market has not yet figured that one out. They still think everybody's looking up or sideways, but no one's looking down. So we haven't seen that the actual net that they've had under us for a long time is most likely gone. Also, for the first time this morning, I heard on CNBC that they mentioned, they put it as one of the bullet points, a 2018 lightening up of their balance sheet. It's huge. So that's the anti-QE. The QE, you start buying all that stuff, and then now you start lightening it up by selling it back out. So that's another form of that's another headwind to come, but we're still not looking at it. We don't look that far. Heck, we haven't looked at this Wednesday, last Friday. So, it's just frustrating to see homework still doesn't carry the weight it should carry. You do all the homework you want, and then you get a headline. Like everybody that's being bullish for one reason or another, and this morning, boom, comes out a headline on oil that Saudi Arabia has actually increased production in February, and oil falls out of bed, and there go the markets. So, headline trading has been here for a couple of years, and we're still there. So all the homework is still kind of like set aside, but not completely. So to trade the indices is being challenging. So you have to find the stories within there.
Everybody is talking about crude here this morning. Nick, let's just get a chart from you because I know you got one probably sitting around in your back pocket on crude here. As crude starts to break down here once again here, what are you seeing in the technicals in crude?
Well, I'm short crude stocks, and I thought I'd use it as a double whammy. And the reason why I chose the stock versus the crude itself is because, not because I don't like their stocks, but because it was a proxy short on the market itself, because it's a stock, obviously, and not a commodity. And I also thought that the dollar has a chance at spiking. So there's a double whammy there. And I also thought that, crude might, everybody believes that we've been stuck in a rut between 50 and 55. But the last 2 weeks, I can't remember exactly when, we had 2 days of good news on crude, and it fell. So if you can't rally on good news, then maybe your time has gone for being bullish. So I am short Chevron. I chose Chevron. And maybe this morning.
Why Chevron?
Nothing specific to it. It just looked like it had the furthest to fall. And actually, I'll show you the chart with notes on it. Actually, I shared it with friends and family. So here's the chart. It was a technical thing, and nothing to pick on its fundamentals. It's just the environment, the market, crude, The technicals is just like, maybe I should pick up a few puts in it, and I did. So I'm sitting on puts. They're going to be green. I'm not rushed to sell them out. I'll see what happens with the Fed, and I'll manage it that way. So the indices have been a little, frustrating to trade unless you're selling ranges, and those have worked. I've been sharing iron condors, and they have been working. These work until they blow up. So, but hopefully you can get out of your risk before the blow up. If you manage your risk well, then you can do that. A lot of people just do the iron condors and sleep on them, and then they hope for the best. And if you hope, you're going to get blown out. And because if they're short dated, it's hard to fix them. If you take them out in time, then it's easy to manage that. So, the market, the good traders are still managing better than somebody who's just picking, blind, throwing darts. But homework is still not as valuable as a tool as before, because it's sidelined by the headlines and all the other issues. If you list all the issues, it's a long list. I mean, I just named a few of them, but there's a whole long of things to worry about. Yet, markets are at near all-time high, especially the NASDAQ. So I think mega caps could play a difference, because somebody was saying, well, how's the market going to rise from here? Earnings this, earnings that. Well, the mega caps all by themselves, I think, saved the year a couple of years ago. So it could happen mathematically that the mega caps keep the indices propped. So this is FANG, and it had technical potential, and it could still live out to its potential. The yellow diagonal lines are equal rallies from before. If I zoom out, you'll see several of those. So it might have a little more in it, but it all depends on how we handle this one more time binary event in the middle of the week.
And Nick is using TradingView.com. I don't know if you listened, but we had Stan Bokovo on yesterday and talking about his system. Nick, we're going to throw a symbol at you here from the chat from Downward Dog and Taser. $22 to me. That looks like a key level. Not sure what we're doing in pre-market trading. I'm not sure if this is one that you follow very closely, but yep, 23.48. I guess I should always look at the pre-market chart here before I make any technical thoughts. Trading up here at 23.48. Maybe get to that high above $24. Nick, any thoughts on Taser?
I don't trade it anymore. I used to trade it when I did stocks, buying and selling, but I don't trade it via the options. I think there was an event where it was clear to me that it was like tightly controlled by one person. I can't remember the guy's name at the time, but anyway, it may have been the founder or something. So I stopped trading it. But technically, this was an area of support. If you look at the chart I just threw in there, 22-ish was a prior resistance up until 2016 June-ish, and then it was tested severely a few times for a good period of time, and then the second time they tried to test it, they did even better. This time they tested it, but it held. So I don't know, did they have news or something, like to get an order from some government agency or something like that, or to resolve some litigation? So it looks like it falls fast and it takes its time recovering most of the times. So if you're long calls and you start getting green, I guess you can try to ride it out here. Hopefully the market in general won't put a damper on that rally.
Just one thing to just add on Taser. That was just only 540 shares trade up at 23.48, both at the same time. You see two trades at the exact same time. You see it back off at 23.15. It makes me think like it's an oops trade almost, or maybe somebody that didn't know what they were doing buying something up 67 cents as opposed to news. That's why it's always important to look at volume. So I'm not sure you're going to see this thing rally today or not.
Also, sorry to interrupt, but also at 24 ish, just under and just above, is an interesting point, because it also looks like a just an eyeball view. It looks like an important level where they've fought over it before, and the last time they went through it, they had two big red candles that sliced through it like butter. So might be a question mark there.
So I wanted to ask you about Tesla here, because it's a little bit of a sleepy giant. We had a little bit of a rally yesterday there. I mean, Mobileye got bought, and then people were saying, well, Tesla, maybe they should, and I Andrew Luff was saying this even on from Citron yesterday on CNBC, was saying maybe they should consider, spinning off some of their, business there, that's similar to Mobileye there if they're going to play that kind of valuation for it. Tesla got a little bit of a pop yesterday. Andrew Luff did say that he has covered his short on CNBC yesterday, and that's why Tesla's trading up a little bit here in the pre-market despite the stock market trading down. What are your thoughts here, though, technically speaking, TSLA?
Tesla is exactly in a band that I put up there, kind of like an interesting zone. It's more of an eyeball, just my personal zone of interest. So the best way to trade Tesla for me is to go out in time and use the options, whether you want to sell risk or buy risk. So if I wanted to short it, I'll buy puts near term, I'll sell puts way out. At the 170 level to finance those things like that, because chasing prices. Here's the thing: Tesla is one of those stocks that doesn't give you perfect entry points at any point in time. If it's rallying, it looks too expensive at any point in time. If it's falling, oh my gosh, I can't catch this falling knife. So if you wait for the perfect entry point, you're going to miss most of them. So the best way to do it is to use the options and go out in time. I've sold iron condors against it, strangles, and those work, but they have been way out in time with like plus or minus 30% price buffer. You think I'm crazy? I'm not. If you go out, you'll see the premiums. You can sell a 170 put in, I don't know, November, probably for $6 maybe. It's just the premiums are hot, especially on trouble days. So the day Goldman Sachs downgraded it recently, I don't remember exactly when, the stock fell hard. That was the day to sell put spreads if you track the stock. And if you did, then you made money because it bounced. And even if it doesn't bounce a lot, because of the fall day is such a madhouse in the premiums, people tend to overpay for those premiums, which you would be selling. So you kind of you have the opposite of a sale. You're selling stuff at a premium.
All right, couple stocks here in the chat before we let you go. VRNS. Boom. Any thoughts on this one? No.
I don't know what it is, but just looking at it, I don't know what it's doing this morning. So give me the heads up. Is it still where about it is?
Oh boy, I'm all right.
Yeah. Well, here's the thing. If it is where it is, it's lower highs, higher lows, coming to a point. There should be a move coming soon. Direction of which I don't know. Body English looks up, but I don't know anything about it. But here it is. And when I see a big range come into a point, something's got to give.
All right, Nick, thoughts on ST from Rob Hood?
Hey, Rob. ST. Let's see here. Same thing, only this one is potentially, if it could add a little bit from where I've seen it yesterday's close, it could have some upside to go because it has higher lows knocking on a roof. So if the roof breaks, they tend to go into the attic. Otherwise, they may take a little breather to mount another shot at it. But it looks like they want higher. So, another level to look at is around the 46. It looks like they've fought over it before, and they fell from it with a big candle, so they might want some revenge up there.
All right, and Dr. J, Nick, and I think you do this. Do you go out 3 to 6 months? I know you always tell me to go out like a month or two. Do you put much of those 3 or 6 month trades on? I bet you have to wait for some levels you're real comfortable with.
If I'm selling, yes, I do it all the time. If I'm buying, I could do it if it's naked. Actually, I'm sorry, if it's spread. So, and it depends on the thesis. If I don't expect a sharp move fast, I do go out in time because it costs about the same to buy a spread now or later. So why not give myself time to be right? But if I expect a big move, I want to be shorter in time because those get heated up faster than the ones out in time. So the shorter the better if you expect a fast move. But if I have a good, strong belief that something is going up from here to way up there, then why not a chance to double my money with time on the clock?
Nick, question here just on the financials. So obviously ahead of tomorrow's Fed decision here on interest rates, and Bank of America has been consolidating here, BAC, for the last 5 or 6 days. A lot of your other banks look the same, kind of just consolidating near the highs here. What's your outlook here for, let's say, BAC?
Wow. I mean, somebody asked me, "Hey, is it time to buy puts in the banks?" Yes, just like it was like 3 months ago. But why would you want to pick at the strongest animal on the planet right now, right? So the banks, the shorting it is kind of like a no-win situation, except for miracles, because if the markets rally, they're going to rally. If they raise rates, they're going to initially rally. So there are other ones that are a easier short than the banks. So I could have said yes to your question at any point in time since that August maybe of last year, but I would be wrong. In fact, I did try to short it several times and I lost with small lotto puts on the banks. And then I said, you know what, this is crazy. Why try to short the one thing that everybody? But the flip side of it, everybody knows that they're going to, the end of the world. So when everybody knows one thing, it's most likely everybody's going to be surprised at some point. But trying to time it, hey, this is one where you go out in time if you want to do it, and at least so if you buy puts, you're not blown out of your put position in one day up move.
Nick, you rip it with these charts here. It's unbelievable. I just got the BAC one. I'm trying to type in the chat and bring up the other charts. But, Nick, you're incredible. Great information. We appreciate it. Be looking forward to talking to you next Tuesday, see where these markets are.
I can't wait, folks. Talk to you later.
Thanks, Nick.
All right, 8:50 a.m. As Dennis was in there buying the S&P futures under 2263.
Told you I'll buy the dippers.
It was quite a. I mean, if you think about how much the market's been moving on a relative basis, a 9-day average trading range down to 13 points, and now you've already had nearly a 10-point range, right? All the algos are in there. It's worked.
Yeah, that's your range.
Yep, there's your range. The range is in for the day.
Sometimes you do see that. A lot of times all the moves happen overnight. That's another reason this market frustrates me. Sometimes, you say, and you'll see this, a big up day, but the market gaps up, and then you have people say, oh, you must have had a great day of trading there. Well, my trade's really independent of the market because I'm trading market neutral. But even that being said, when the market gaps up 100 points on the, or if you're talking the Dow, and, and it sits up there, if you didn't have positions overnight, you're not really making money. So, a lot of the moves happen overnight in this market and not as much intraday anymore.
All right, 8:51. We have a few minutes left here. Did we do any ratings yet?
No, let's jump into ratings because there are some big ones here today. And first one, which is interesting, is Walmart here. Walmart is getting added to the US 1 list. That's like their big list at Bank America here with a price target of $88. So if you look at WMT, you wonder why it's trading up 1% here in the pre-market. That is your reason. Walmart trading at $70.69 here, went off the board at $69.95. So nice little lift here for Walmart as added to the US 1 list at Bank America.
All right. Well, for those gap fill traders, I don't know if that was from earnings or whatnot. You had a gap to 69.79 up to 70.70. This is back on February 17th. If you were weighted, you were rewarded. It actually gave you a few chances to buy it under 69.79. Trading up in the pre-market, I don't know if I can run out and buy it off this. I think you might get a chance to buy it a little bit cheaper here with a weak market. Little wall at 71, so before you get excited about the 72 handle, you probably have some institutions sitting out there at 71 or that vicinity. You had 4 highs between 70.90 and 71.08, end of February, early March.
Jumping over here to Disney, they are getting upgraded to buy at Guggenheim. The stock's trading slightly green here in the pre-market. Obviously, overall market pressures are keeping it down here. This is a stock that has been a consolidation station as well. I mean, look at this stock chart from the last month and a half, and even the last couple of weeks. We've been in a 2-point range here for basically 2 weeks here. Just consolidating nicely under that 111.99 high that we had. I'd imagine there's probably some size kicking around there at 112. When you see multiple highs in the same area just under the point, a lot of times it's because there's a big institutional seller lurking there at the point at 112. So that's my bogey. If it can take out 112, maybe we're in a little bit of breakout mode for Disney. Until it does that, I guess, I'm not with Guggenheim. So 112 is my bogey.
Huge, yeah. And watch for the oops trade on that, because a lot of times you'll see a big institutional seller. It will get in there. They'll take it out. If you don't see it go 05, 10 bid, 15 bid, 20 trade, then all those people are going to be choking on the numbers that they bought at the point. So Closed it, right in this area, so it'd have 50 cents to travel. Great number there, 112 here in Disney, the House of Mouse.
GLW Corning downgraded at Goldman Sachs there this morning. Stock is trading down 20. Oh, we're actually down 70 cents here now. So getting hit pretty hard here. GLW 27.71 is where it was, and it's now at 27. Just tick 27.01. It is bid back at 27.20, so I think 27.01. Maybe people are a little bit excited there, but 27.20 to 27.30 is the current market.
Pre-market low, 27.01. I don't think a whole lot, 500, 600 shares traded there. Instead of selling it in the hole here, I'd like to see if we can get back up to the 27.50 area. Boy, you had your last four lows, right there in the 27.50 handle. I look for that as resistance as opposed to selling it in the hole.
Spencer, anything else you saw really that you want to jump and highlight from the ratings parade here this morning?
Not a ton. You saw a couple analysts that are chasing price on the Mobileye deal from yesterday. No, I mean, you got Disney. You covered.
We got Disney, Walmart, GLW. There's Abbott Labs got downgraded. ABT got downgraded. FEMO.
Yeah. Let me look.
How about NVIDIA? NVIDIA.
I'm not seeing.
Was there any?
No.
There was any analyst action on
No.
NVIDIA?
No,
I
you
didn't
guys.
see any.
I say it wrong all the time, and you beat me up, and then I say it once and correct, and no one says anything. But
Joel, good job pronouncing NVIDIA.
all right, boy, you had a nice pop
Did you notice
here.
I said it wrong?
103.15. That is your pre-market high. Trading up, boy, I tell you, I don't see a lot in the 102, 103 handle. I think the big challenge will be if it can get back above 104. Actually, 102.84 is your March 2nd high, and then 104.30 is your March 1st high. So a couple levels to keep an eye on, and AMD has been all over the place too. Had that big stock seller, sent it down, came back up. Man, this thing is pretty volatile for a 14.
It is.
Yeah, look at this thing.
I complain about volatility. Maybe we should just start becoming an AMD trader like Ace there, because AMD, it's got some volatility. Obviously, added the S&P 500 there yesterday. Stock got announced, the previous night. Obviously, trading off it yesterday. Stock got the big pop. It's dropped, giving it all back. I mean, a lot of times you see those S&P pops short-lived, and that's exactly what we saw here on AMD. Stock is back at $14 here this morning.
All right, silver and gold mining stock here, Avinu, ASM. Not a lot of movement here. I see it unchanged. Don't want to see it take out 162 on the bad side. I know we're 50 cents or 15 cents away from that. On the upside, you got all kinds of resistance here, just under 190. A couple highs at 187 and 189. Dennis?
Couple stocks I just wanted to note, which we hadn't talked about, and we did note in the pre-market show. GoPro and Fitbit, both of those stocks. Ace was talking about GoPro. Both of those stocks broke down again yesterday. GPRO, this is a breakdown here, classic breakdown. Stock had multiple lows in the 790 area, 792, 796, 795, 794. Those are the lows from the last 4 days. Breaks down yesterday through those lows straight down to 752. We catch a little bit of a bounce. You know how I love my 2-day move here, though. Take out the low from yesterday. I think you could see another 30, 40 cents fall in this GoPro here. So not liking the GoPro chart, at least from the long side. Fitbit, same story. Actually broke down yesterday from lows that was around 582, 576. Funny how these two stocks somewhat trade together here. Both kind of the one-trick ponies. Got down to 555. You can take out yesterday's low at 555. I think there's more room to the downside in Fitbit.
All right, a lot of down days in a row for Fitbit here. Boom. Let's see here. Cover a few more stocks. ASML, you had that pop on Friday. Lower high, though, on Monday. Not a great sign, especially if you're trying to lock in the profits. Don't want to see it below yesterday's low at 23.43. Gap to fill under 22. X for a bounce potential here. Haven't took the X here. Yeah, I'd say if you can hold that low from yesterday in the lower 34 handle, you got a little bit of a bounce. Looks like a little consolidation more than a rip up back here in U.S. Steel. All right, 8:59, Spencer. You want to wrap things up?
Sure. We got a good show, a good slate of guests on the docket tomorrow. We have Visible Alpha on the show. They do insight into company fundamentals. We have Yaron Golger on the show from I Know First. They have their own sort of rating system for stocks. They're a pretty good Israeli company. I think both Visible Alpha and I Know First will be at the FinTech Awards in May, on May 11th in New York City. It's hosted by Benzinger. And then our other guest is someone that I'm really excited for, is somebody from Midnight Trader. Her name is Alice Marantz, and her specialty is looking at money flow as it relates to the Fed and big macro decisions like that. And so having her on tomorrow will be really great. So looking forward to those three guests on tomorrow's show. If you missed any part of today's show, you can catch the whole thing again right now, I guess, on YouTube. You can if you want, or you catch the podcast on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. So looking forward to tomorrow's show. We got Alice, Andres Franz, Scott Rosen from Visible Alpha, and Yaron Golger. Have a good rest of your day, everyone, and we'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.